Welcome to The Pulse, where we delve deep into the issues and ideas that are shaping the future of education. I'm your host, Rick Cerncy, Superintendent of the Putnam County School District, and each week we'll be talking to teachers, administrators, and other experts in the field about the latest trends, best practices, and most pressing concerns in education. Whether you're a teacher, a parent, or just someone who cares about education, this podcast is for you. So sit back, relax, and let's dive into the pulse. And we're here for a special podcast today. There's some information I've been wanting to share with our public, and I'll tell you what that's based on. As you know, we passed a bond issue here in Putnam County in November of 2022 for $300 million, and it's the first bond issue we've had passed here since 1979. And as you know, that's part of our 10-year revitalization plan that was approved by our school board, which involves the building of 6 new elementary schools using the bond money. And we'll also be talking about the building of new high schools, which involves an entirely different funding source. So there's been a lot of confusion that I want to clear up today, and really talking about how much people are paying to pay this referendum back. So with me today, I have our CFO, or Chief Financial Officer, Rhonda Odom. She's been with us a long time. And our co-Chief Financial Officer, Jonathan Odom. So I'm very glad to have them here. And, of course, both of them are very financially astute. And I've asked them to come in and really talk about, for the general public, what all this means and how we as taxpayers can really understand the process of, first of all, paying our ad valorem taxes and paying all the taxes that are listed on there, but more importantly, understand how the bond referendum is being paid back and how much each person's share is. So today, Rhonda and Jonathan, thank you both for being here, and I know a lot of information to share. So with that said, I'm just going to ask you to kind of take it and run with it, and I'll ask some questions as we go, but this will be provided in a number of different places for people to review and continue to refer back to. So we'll talk more about that at the end of the broadcast. So Rhonda, go ahead and just talk to us about the bond referendum and the taxing that's going on this year.
Well, thank you, Rick, for having us here today. Our office has received a lot of phone calls regarding the increase that people see on their tax bill. Taxpayers were seeing an increase higher than what they expected and thought really that it all had to do with the bond. But in breaking it down, as we talked to people, we broke down all the information and we found out that the increase was coming from two different reasons. One, yes, the millage we levied to pay the principal and interest on the bonds, and two, the increase in property values. So, Rick, if you'll humor me, for the general public, I'd like to do a brief explanation of how a school district receives their funding and explain millage and the value of mills.
Sure, that'd be great.
I'm going to refer to document 1 first, and basically all this is from the state of Florida, and we receive our funds through the Florida Education Finance Program, and they tell us, when they provide this document to us each year in creating our budget, they tell us how much we have to levy for required local effort millage and how much we can do for district discretionary. So when they give us the FEFP document, it's the entire general fund budget. They include local revenue in there also. So they tell us the millage we have to set. And in this document, if you go down to Putnam, you'll see that our millage for required local effort is 3.115 mills, and for district discretionary it's 0.748. That's a total millage of 3.863 mills. And if we don't do that, we lose out on $60,000 worth.
$60 million.
$million
Right.
worth.
So the legislature mandates that we levy that. We don't,
That's
like you
correct.
say, we don't have any choice but to do that, or we are not entitled to the other state funding.
That is correct. And so moving forward to the second document, I wanted you to see briefly a breakdown of state funding versus local funding that is in this FEFP document. And it's important to note that the state wants to be sure that students across the state are treated fairly through the general fund, which is the main operating fund of the district. So if property values go up in a county, and the millage brings in more dollars, the state will lower the state tax dollars that they give us to fund the school district. Again, because they want each district to receive similar funds. If your property values increase so that you're receiving more local, then your state funds will decrease. And if you'll look at the document on the screen, I've highlighted a small subset of the 5 school districts, 51 through 56, and Pasco County receives 27% of their general fund budget from local sources and 73% from state. Pinellas County is 60% local, 40% state. Polk is 25% local, 75% state. Putnam is 31% local, 69% state. And St. Johns County is 44% local, 56% state.
So it really talks about that tax base.
It does.
Right, per county.
Correct. And the more property-rich counties receive more of their money from local taxes, and thus they get less from state sources. And this state versus local millage is for our general fund only. Those state and property taxes make up the huge bulk of our general fund. We also have a few other local monies like investment income on our general fund money that we have invested, indirect from us being NEFEC's fiscal agent, and indirect that our department or our school district receives for us handling all the federal grants and the school food service grants. Moving on to document 3, I wanted just to briefly show whoever's watching the millage rate that we had last year versus the millage rate that we have this year. And our millage rate from local property owners last year was 5.463 mills. We did, as everyone knows, add the debt millage this year, so our current millage is 6.230 mills. Required local effort that the state set went down by 1/10 of 1 mil, and the debt service, the millage required to service and pay for the principal and interest on the first year bonds was 0.0867. So those two offset each other. Entire millage increase was 0.767.
And just a point, you said first year of the bond. That is a 30-year bond, so we're paying that off over a long period of time, like a mortgage.
That's
right?
correct. Yeah. And pretty much the principal and interest is set the same amount each year that we're going to have to come up with. But what you'll see is that the millage on this particular $100 million worth of bonds will go down each year as property values go up. It'll be a lower millage amount, but we'll still collect the same $6.2 million that it's going to require to pay the principal and interest on these bonds. We also have on this form the 1.5 mils for capital outlay, and beginning this year, that money will be used as our participation match. We were awarded special facility funds from the state to build the new Crescent City Junior Senior High School. So the entire 1.5 mil becomes a participation match for those dollars we're receiving. In the past, we used that to fund the maintenance department, to buy buses, maintenance vehicles, to pay a portion of our property insurance, for computers, equipment, and to pay for our resource enterprise system. That's like Skyward. And as you can see, I mentioned before, that millage did go down to 0.1, which is just 1/10 of 1 mil, and briefly I'll discuss what a mil means and how much money that generates. All right, now we'll look at the 4th document that I have, and it's Putnam County School District's tax increase from last year to this year. And on this document, it's leaving the appraised values and taxable values exactly the same as they were last year, so we can sort of compare apples to apples and see, how much, if nothing had changed, how much the bond would have cost a property person, so that we're not looking at increased values to begin with. So on this document, I've highlighted one line item, and it is $125,000 appraised value of property, which means that with the $25,000 homestead exemption, it's $100,000 taxable value. And based on last year's millage rate, that would have been $546.30 taxes. That's from the 5.463 mills. And this year, it's $623 taxes based on the 6.230 mills. The total amount of the increase was $76.70. And actually, the required local effort portion went down $10 because it went down 1/10 of 1 mil. and the total amount attributable to bonds was $86.70. So for a person that had a home value appraised at $125,000, taxed at $100,000 based on the $25,000 exemption, will pay this year $86.70
for the bond.
for the bond.
Okay.
That's correct.
And the rest of the amount you're talking about is considered to be what?
Just your regular millage based on the property value. Now, right now, I haven't got into those increased property
Sure.
value, which I'm going to spend
Sure.
some time on that. But to put things in perspective, one meal equals $100 tax owed on an appraised value of $125 and a school taxable value of $100,000. So when we're looking at doing 6.23 meals, that's why the overall taxes would be $623 on that home.
And of course, home values are going to differ above and fewer than that. So
That's
it
correct.
really depends on the amount of their home.
And on this particular chart, it's got several lines worth of different values going from $25,000 appraised all the way up to $500,000 appraised. No matter the value, you still get just the same $25,000 homestead exemption, but you can see the values all the way down. A $500,000 home taxed at $475,000 for school taxes. The taxes on that would be $2,959.25, and the amount of that, the total increase was $364, and total amount of taxes $411.83 was attributable to the bonds. Now that brings us to the next reason that local taxpayers are paying more in school taxes. Last year, Putnam's property base was valued at $6.18 billion, and this year it's at $7.48 billion. So overall, and this excludes any new construction, this is just the value of the same property that was in place last year to this year. That's a 21% increase in market values of properties. So when your appraised value goes up, then also your taxable value goes up, and so the millage rate is then applied to the current year taxable value, which is significantly higher, so of course your taxes are going to go up based on your value of your property going up. Now, school district taxes are different than other taxing authorities, so I want to briefly go over that. The first way that school district taxes is different is within the homestead property values. If your property is a homestead property, the appraised value of your property is limited to a 3% growth rate on all taxes. That's county, school, St. Johns River Water Management District, the Fire Taxing Authority, and the City of Palatka, if you have those within your bill. So that's the Save Our Homes Amendment. But the other taxing authorities get an additional $25,000 homestead exemption if their properties are valued high enough. But for school district taxes, you only get the original constitutional $25,000 homestead exemption.
So therefore, as you'll get into this, the other taxing authorities, their amount they're raising will be much less
Yes.
than what the school district would
Yes.
show, and I know you're going to get into that.
So for the homestead, again, the main difference, because we're all limited to 3% there, the main difference is that we just lower our taxes by $25,000. They all lower theirs by $50,000. And let's see, with the homestead property and the 3% growth cap, that $125,000 appraised property that I highlighted with a $1,000 taxable value would now, with a 3% growth, have an assessed value of $128,750 and a taxable value of $103,750 in the current year, and a taxable value of $78,750 for all other taxing authorities. And I'm going to show that an example in a minute, but I just wanted to get that out there, that 3% growth rate does, significantly increase the taxes. If your property is non-homestead, however, there are no exemptions in place. However, there's a limitation in place. The Florida voters passed Amendment 1 in 2008, and that amendment sets a 10% growth rate on increases to assessed values of property from one year to the next, and that's on all taxes except school district taxes. For school districts, no matter what the property increase was, there's no cap, there's no limitation. So if your property value went up 21%, your taxable value is going to go up 21%. For non-homestead, assessed or property value equals taxable value. So that's one that has a big difference on school district taxes than other taxes. So let's say your property increased in value, that 21%, that was the average growth of market property values this year. So you would see your non-homestead property, and that includes properties that maybe you own and you're renting out, or businesses, something like that. The market value increased by 21%. So that $125,000 market value property now has a market value of $151,250. So with non-school district taxes, a limitation of 10% growth kicks in, and though the market value is $151,250, the assessed value after the limitation just goes from $125,000 to $137,500. And so all taxing districts except us apply their millage rate to that $137,500, but we apply our millage rate to the $151,250. So I want to look at a couple of examples now. So we'll look at homestead property first, and I'm going to show both the trim bill that comes out early in the process and then the tax bill. So the next document is a homestead property. And for this homestead property, last year the market value was $100,340. And with the varying years of a 3% cap on homestead showing up in the assessment reduction column, the assessed value was $77,130. After the homestead exemptions, the taxable value for all taxing authorities except the school district was $27,130, and for the school district it was $52,130. Again, that's because we only do the one $25,000 exemption, whereas everyone else does too. So the market value of this property in the current year is now $119,180. It increased 18.8%, but was limited due to Save Our Homes. So the taxable value is now $79,000. The assessed value, is now $79,250 because they could only bring it up to 3%, and the taxable value is $29,290 for all taxing authorities except the school district, and it's $54,290. And at the very bottom of the document, you'll see all of the taxing authorities' millage rates that were proposed at this time and then all became set after budget hearings. You'll see those millage rates, and you'll see that applied toward the taxable value and how much taxes this person actually owed on their New Year taxes. So now I want to look at this same piece of property, and I want to look at the tax bill. So you'll see from the tax bill, which is the next document, document number 6, that those same assessed values and exemptions and taxable values show up and again applied to those various millages, and it shows the total taxes owed. So the county total millage rate is 8.8441. The fire taxing district is 1.10. The school district's total tax millage is 6.230. St. John's Water Management District, 0.1793 for a total millage rate of 16.3534 and taxes owed of $634.74. And on this particular piece of property, there's a line item that shows that the cost of the bond debt is $47.07. So I'll go to the next document now.
And that's listed under debt service?
That is. It's listed.
On that form?
Let me get the exact wording. Voted district school debt. Is the way they worded it.
Very good.
Yes, sir. Thank you. The next document is a non-homestead property. The market value last year of this particular property was $221,120, and this year it increased to $257,420, a 16.4% increase. For all other taxing authorities, they were limited to a 10% cap for Amendment 1, so they go from assessed value of last year of $177,180 to an assessed value of $194,890. For the school district with no cap, we went from the taxable value last year of $221,120, which was market value, to a taxable value this year of $257,420. Again, you'll see the taxable values applied at the bottom of the page with the various millage rates. The next document is the tax bill that goes along with that same property, and it's identical to the one before that I talked about. It's got the assessed value. There's no exemptions. You got the taxable value. Total property tax owed on this piece of property was $3,576. The cost of the bond debt on this property is $223.18 of that $3,500.
So comparing those two properties, one has the exemption or the
Homestead exemption.
homestead exemption, thank you, and the other does not.
Correct.
So the difference in the bond payback from the one with the homestead exemption, that first one is $47 per year,
Yes.
and the other was 200 and something.
Yes. It was
So-
a higher value property,
Right.
too.
And again, that is over the year. So really, as they look, at their payment, their monthly payment, just divide that by 12, and that's what they would actually be paying
That's correct.
for,
And
for the bond.
that's correct.
Right.
And at the very end, I'm going to go ahead and say it here, but I'm going to go back to that $100,000 property that we talked about when we went around talking about the bonds, and the $86.70 that is actually the cost, and how much that is per month, per week, per day. So
Right.
we'll talk about that
Very good.
briefly. Our next document is, I wanted to look at the tax increase on homestead properties, the amount that's attributable to bonds versus the amount that's attributable to increased property value. So that's really one of the main points of what today is all about, because property taxes for the school district did increase this year, and I wanted to be able to break it down to show how much was bond and how much was not. So from the document on the screen, I start with last year's appraised value, and then I've got last year's taxable value. And with the homestead, we're limited to that 3% growth I talked about. So I've got the new market value with the 3% growth and the new taxable value taking out the $25,000. I've got both years' millage rates, last year's and this year. So I show last year's taxes and this year's taxes. And I've got a column that shows the total tax amount increase. And then we break that total increase down to the amount for bonds and the amount for increase in property values. So the one I have highlighted, again, I've got those same property values from $25,000 to $500,000. And with the 3% growth, they go from $25,750 to $515,000 as the property values. Let's see, the one that I highlighted, I mentioned that the overall cost of the bonds was $86.70. Now on this one, you'll see that the bond amount is higher on homestead properties than it is on the increased property values because it's limited to that 3%. So, but again, it's $86.70 on this property value that is now with the market value is $125,000 property appraised value. And after the $25,000 homestead, we get back to that $100,000 taxable value. And it comes to $86.70, and that makes perfect sense as the millage rate for debt, as you recall from another document that we had, is 0.867. And for this piece of property, that's 23.7 cents per day, or $1.66 per week, or $7.23 per month. And then the final document that I have is the tax increase on non-homestead property with the amount due to bonds and the amount due to the increased property value. So taxable value equals appraised on these properties because there's no exemptions. So I've got the same columns, the taxable value, appraised value, taxable value, they equal. Then the new market value, and what I used on this one was a 20% just to have round numbers because some of the ones that I individually looked at before putting this together, some may have only had an increase of 14 or 15%. Some had 26, 27%. And as you recall from the very beginning of me talking, overall the entire district, the property values of the county went up 21%. So I just used 20% to come up with a nice round numbers. So the $25,000 to, I went to $1 million on these properties because they are people's rental homes, they are businesses. You know, we could have went a lot higher than that because we know we have some valuable business property around here, but the $1 million after the 20% cap is now a taxable market value of $1.2 million. But in looking at it and going down through the pages, that 20% growth on that $1 million property, the taxes on it for this year are $7,476. That's a $2,013 increase from last year. The amount for bonds is $1,040. The amount for increased property value is $972.60. All the way down, all the different property values, the columns are very similar. It's not 50-50, but it's really close. So you can see that when people are complaining about their increased property taxes for school districts, it's not all related to the bonds. It's about half and half. The lower categories, it's a little less than that, but as you get up to higher amounts, they're looking pretty equal. So really, that's been so many of the questions that we received in our office, and I know that it's important for the public to know where the increased taxes are coming from. And doing this bond has been something very big for our community, so I wanted to break it down and really show how much of the tax is attributed to the bonds and how much is not.
Well, to me, that's extremely helpful. And again, there's a lot of numbers involved there. And again, we're trying to provide the overlays on the screen just so you can follow Rhonda's conversation. But, I think as time goes by, and correct me if I'm wrong, as more people, which we project to move into our community, then that bond repayment should be spread out over multiple taxpayers.
That's
right?
Correct. Mm-hmm.
Now, there will be, as time goes on, as more bond money is pulled down, there'll be additional obligations there. But again, it's a 3-phase process, and and that's why we're doing it the way we're doing it. But the other thing that I've been asked too is why, and we were asked this when we initially were proposing the bond, why are we paying this back with ad valorem taxes, which is paid through our property owners, rather than a sales tax? And I know that we talked about that a lot because sales tax is paid back by not only people here, but people who might be visiting, that's shopping here and that type of thing. So just, if you would just touch briefly why we did not do the sales tax repayment as opposed to ad valorem tax.
Yeah, that's a great question. Sales tax in our county, it's already at 7% because we have the Better Place plan. We're at 6% and then 1% for that. And the highest tax rate right now that any district has is 8.5% sales tax, I believe, or the last time I checked. But for us, a 1% sales tax will only roughly bring in about $5 million. So that's not enough to even start on a new school or
Right.
To do major renovations or anything. So the sales tax just would not work for us.
Now, there are some districts like a Duval County or a Pinellas County that might have a sales tax. Mm-hmm. But again, we're looking at a large amount of people, large amount of business that can generate that.
That's correct.
So, but in our district, this is a course of action that we're following. And
we looked at any method that we could possibly look at to raise the money for this, and really it came down to doing the bond initiative was the only way that we could cover the cost of building new schools.
So the number one thing I want people to realize when you look on that tax bill and you want to know what I am paying for this bond, okay, is go to voted school district debt, I believe is the way it said it. Which is specifically the payback for the bond.
That's correct.
And the other categories, the 1.5 mil is pretty constant. That's for capital outlay that is designed to pay for certain things, like Rhonda talked about, related to maintaining and buses and that type of thing. But the other ones is the cost of running our school district when it's joined with money from the state. So again, that's an equalization formula. Every school district, based on their tax base, that could be different. But understand that money is not one dime of that money is being used for paying the bond. It's strictly that voted millage. So, Jonathan, anything you want to add at all?
No, and I know you mentioned you wanted to touch on the special facilities earlier, and I think that's key point to point out is the fact that the 1.5 mils is completely separate. And,
Right.
It's being held back for 3 years, required 3 years to pay it back in order to get the special facilities completed.
And that's a great point. I want people to understand. We're building 3 schools currently. 2 of those schools are being built with bond money. One of those schools, the most expensive school, is going to be built with state money, okay, which you're not paying back directly. However, our contribution that the state requires is that 1.5 mil for the 3 years that you're talking about.
Correct.
So, ladies and gentlemen, we are getting a tremendous deal from the state of Florida to build that school. And however, the school district, we will not receive money for 3 schools at a time from the state of Florida. So Putnam County is actually paying for our 2 schools, and then the next round or the next phase, which should be around 2025, 26, somewhere in there, is we will look at building additional schools. So right now we're looking at opening all 3 of those schools around the fall of 2025. But things, in the construction business, things are flexible. There's delays and that type of thing. But right now that is our time, and so that's what we're aiming for. But I do want people to understand we are available to answer questions. And could they email you or call you? What's the best way to contact either one of you if they have a question? Because I know Rhonda's going to be retiring this summer. Jonathan will be the person probably a lot of people will be calling on. So we'll have your email available. Is that good? A good way?
Fine.
Okay.
You can list it on this video if you
Right.
want to, or
Yep.
you can tell them now.
I mean, it's jodom@my.putnamschools.org.
And
Okay.
your phone number.
Office phone number is 386-329-0522.
Very good.
And we'll be more than happy, to answer any taxpayers' questions about this. We can call up their property, do an analysis on it. We've done that for several people, and they've all understood and very, thankful for the information that they got.
And we'll have this information available on our website, on our Facebook page, in a number of locations. But I would urge all of you, as you're watching this, if you have friends and neighbors and family who have these similar questions, please refer them to this video. I think it's very comprehensive, and just have them look at the video. And I believe on our website there's actually a way you can a person can look at their approximate appraised value, right? And it will kind of give them an idea what their taxes should be.
I'm not sure if Ashley has that spreadsheet out there.
Yeah.
I have provided that to her where you can put in your taxable value, and it'll show you the millage
Very good.
related to the bonds. And
But if you
everything.
can't find it, or if you have any additional questions, I want our public to be able to reach out to either Jonathan or Rhonda Odom, and we will definitely try to answer your questions. So with that, thank you for being here. Rhonda, Jonathan, thank you for being
Thank you
here.
for having us.
And we certainly want to make sure that people are very informed about the taxes they're paying. Hope you have a great day.